Stock of the day. I thought we'd get the panel's view on Santos after its $5.8 billion Barossa pipeline gets a green light from the federal court, ruling in favour of the company following a dispute with an Indigenous man seeking to pause work, claiming the 200k odd pipeline would interfere with traditional beliefs of nearby Tiwi Islander. It was a major stumbling block. Of course, Santos and Woodside in merger talks. David Lane, the go-ahead for the Barossa project. Santos are now going to fast track it. It's big. It's got a lot of potential for them. What's it going to do to Santos's value?
Yeah, it's certainly a very positive move for them. The project's about $5.8 billion. So as you mentioned, it's a big project. Will obviously take a lot of time to build, but longer term, it means that their production pipeline is improved. And generally, Santos's production pipeline is actually very positive. The company has already forecast, even before the Barossa gas announcement, that their production is supposed to double to about 180 million barrels of oil equivalent by 2028. So they are looking at an improved production cycle at a time when the oil price, the outlook for oil price is slightly more positive, I suppose, based on some of the issues that are going on in the Red Sea and the shipping, potential issues that are happening there. So short term, I think we could see a higher oil price. Medium and longer term, I think Santos is very well positioned. And we've got an accumulate recommendation on it, but our valuation is significantly higher than where they're currently trading at. The analyst has got a valuation or fair value of $12.30 on it. So, in spite of the fact that we've got an accumulate recommendation, they're certainly very positive as far as the long-term outlook for the company.
Okay, so we're not going to get any more news on the Woodside merger, $80 billion worth till February. So if you're a Santos shareholder, hold on. From what you're saying,
yep.
Would you buy into it now on the prospect of a merger?
Oh, I mean, both companies are in good position. We've actually got a buy recommendation on Woodside, so if I was leaning one way or the other, I'd probably go towards Woodside at the moment. But from current valuation, I think that Santos is good value as well. So yes, I think that would be a positive for both businesses, but there's enough reason to look at buying them irrespective of whether the merger happens or not.
So it's Woodside, like Santos share price $7.60. Your analyst has a valuation of $12. Are Woodside getting it cheap?
Well, potentially, yeah. And obviously there's, as you said, there's a lot of negotiation to go on between now and when a deal happens. And as we've seen over recent years, just because a deal's announced, it doesn't mean that it actually occurs. But yeah, Woodside under this deal would probably be in a good position. And I think ultimately the combined business would be a great business.
Michael?
So this particular decision had been not anticipated by the market, but the market was waiting for it to come out.
And no one was quite sure when it gets to the federal court, and I think there's a lot of mining companies breathing a sigh of relief saying, okay, from a mining company's point of view, that's a sensible decision out of the courts.
That's right. I mean, it's always sensitive, these kind of court cases, but the judge found pretty overwhelmingly in the favour of Santos in this particular instance, and it does shore up regional gas supplies because this is a fairly large project. It means that the free cash flow profile of Santos is enhanced. They are expected to see earnings growth over the next 3 years in the vicinity of 20% or so. This is at these oil prices today. We've held Santos for a number of years. It's done nothing. We've been kind of waiting for the story to play out for Santos, so it's never really arrived. Even a couple of years back when energy companies had their amazing year, it was hard to sit back and watch all these other companies doing really well and Santos struggling. But we've held firm just because we are very much attracted by the growth profile that Santos has in place. They've got obviously this Barossa project, a big Alaska project as well. And it's conceivable that in 10 years or so that Santos has more production than Woodside. Obviously, it's not going to be easy to deliver that, but it is possible. So we just see that there's a lot more value for Santos. We understand, obviously, Woodside has this merger proposition on the table, which would create a lot of synergies. But we're not over the moon with it, to be honest. We do think that...
Oh, so you reckon Woodside are getting it cheap?
I think Woodside's getting it too cheap, and as a long, it's not suffering, but long-term Santos shareholder, I'd rather hold out and see the company develop its own assets.
Well, as the Orbs analyst,
that's right.
Got $12 value. You'd rather
That's
$12
right.
bucks than $7.60.
That's the thing. To be capped out today at $1 or $2 over the share price even isn't really that attractive to us. Although, you know, we would probably take it, but it's not ideal. We obviously don't have the voting volume to really sway that decision one way or the other. But we do like that outlook for Santos. They do have a lot of assets. They have been doing a lot of buybacks. The balance sheet's in a lot better shape than it was. And they're looking to pay out, I think, 40% of free cash flow as dividends, up to 50% if this Barossa project got the approval, which it has. So that's a lot of income to come through as well that they're about to spit out as they wind down their CapEx expenditure, which they've obviously got to do to get these projects up and running. Also, their debt levels are a lot lower, so their interest repayments are a lot lower. So their free cash flow profile is very attractive, which is good for dividends as well down the track. So yeah, very happy with the decision in terms of an investment case. I think it improves the business, and we're happy to stay in Santos, even though we don't think it's going to shoot the lights out initially.
Would you buy?
Yeah, we would buy.
Right.
That's our preferred energy exposure on the ASX.
Right.
We acknowledge that Woodside's a much better company at this point in time in terms of the quality of assets and the amount that it's producing, etc. It's capitalising on the markets today. However, we just see more upside with something like a Santos, with the potential there to really drive superior share price performance.
That's interesting. Okay. All right.